Good day, good evening, good afternoon, wherever you're at in the world. Welcome to BitLab Academy daily live streams. Please go ahead and give me a thumbs up in chat. I'm going to pop this out so I can try to make it much more. I'm trying to spend a lot more energy and paying attention to what's going on in chat so we can make this, as I said, a community. This last week here at BitLab Academy daily streams, I was trying to really do a lot of foundational stuff that we can always refer back to when people tune in, so we don't always have to break down exactly what a support and resistance is, exactly what a fib is. Now, I'm going to try to bring beginners along as much as I can throughout all of this. But I always also want to have those materials and resources and videos that you can always refer back to and check out if you go to the BitLab Academy YouTube page and scroll down a little bit, or go to the live section or the playlist section, and you will see that there is a number of different videos here. If you come over here to live, you can see there's all kind of stuff that helps you walk you through, TA tips, charting tips, different tools you can use, how to cut your pumps. There's so much stuff in here. So definitely refer back to this if you can. But getting back to the start of the show, my name is Kelly Kellum. Welcome to BitLab Academy daily streams. I do this every day, 10:30 a.m. Eastern Standard Time, sometimes from my home office in New York, sometimes here from the magnificent BitLab Academy studio, where we film all the content, all the courses, all the lessons, huge updates coming to BitLab Academy. And it's all being done here in this amazing studio that we've built. And I get to stream here while I'm here in Atlanta. So with that being said, please follow all the socials down here on the bottom. Hit that like button, hit the subscribe, ding the bell. We're going to jump right into it today. And again, my name's Kelly Kellum. Thank you for being here with us. Thank you for building and encouraging, empowering, wonderful community here together with me. Thank you for being here. And shout out to the Investor Bros who I was on their podcast or their stream earlier today. They're like family of mine here in the crypto space. So it's a pleasure to hop on there with Tim and T-Shroom. And later, right after this stream, I'm going to be on the BitBoy Crypto Show doing TA there. So it's an all-day streaming for me today. So let's go ahead and jump on into it. Thank you again for everybody being here, wherever you're at in the world. Go ahead, put in where you're from, what city you're in, and what your two favorite altcoins are. I'm trying to do a bit more TA today, and we're also going to be breaking out a lesson within the TA that we're also going to cut out later and actually have another video from. So we're trying to make this as productive as possible so it can be informative and education for you, and also building this community. So what's up, everybody? Welcome to the show. So first thing, I want to make sure you're following BitLab Academy on Twitter. It's at Academy BitLab. Make sure you follow me as well. It's at Kelly Kellum. I post a lot of great stuff, and I reference this chart probably 30 times in every stream. So you can pull this off my Twitter if you'd like. And then, of course, make sure you follow us on Instagram at Academy BitLab. We're trying to do a lot more shorts and stuff there, clips and stuff, little quick teachable moments that we're going to be sharing there. And please make sure you sign up for this newsletter at bitlabacademy.com. There are 5 winners that we're going to be picking towards the end of this week. Lifetime membership, free lifetime membership. So go to BitLab Academy, sign up. This newsletter, I mean, you get the benefit of having the newsletter as well as being entered for this contest. But I'm sending out every week some really great content, what's going on in the charts, some different updates that are coming, all kind of stuff, and it's free. I'm just incentivizing people to get in here, entered to win a free lifetime membership. So let's go ahead and jump on into the charts. And what do we do anytime we jump on into the charts? So no matter what we're doing when we're trying to find any sort of trade setups, we want to make sure that we're looking at the macro, the micro, and the midterm. So let me go ahead and hide this. Where are we at here? This always eludes me. Doesn't matter. So what we're going to do here, I don't know why Frankie's really good at this object tree. I don't ever use it. Whatever. So what we're going to do here is we're going to look at the macro. So anytime we pull up charts, what do we do first? We want to look at all the information that's on the chart. And then from all the information that we see on the chart, we want to then observe what the macro chart is looking like. We want to break that down to the midterm. So the macro would be like the monthly or the weekly. The midterm would be, 3 days still kind of macro, but so down to the daily, really starting to understand. Let's go here on auto, and we're going to go only the chart without the indicators. We got our midterm, and then we can come down to the 4 hour or below for different phases of micro, more local look of what's happening with the price action. So last night, let's go ahead and zoom all the way in. Let's go down to the 2 hour, and we're going to look at what happened last night. Because what we want to do when we're identifying exactly what's going on with price action is we need that bigger context of the macro cycle, macro trend that we're in. So we know what the heavier weighted sort of resistances are, supports, major key levels that we might be pressing up against right now on this macro time frame, or micro time frame, this more local, smaller time frame. So we always want to look at that macro first. And now that we're zooming in here, we kind of shortcut it all the way down to the small time frame, because last night there was, for people that trade looking at the 15-minute or the 24-minute, this feels like the end of the world. Because you're looking at this and you're like, oh my God, the bottom is falling out of Bitcoin. It's over. But when you look at this, if you come back to the macro, let's go to auto here. You go back to the macro, look at that tiny little blip. Context is everything in markets. Context is everything in markets. So the context here is that we're still fighting to establish that we've broken this massive multi-month over year. This is, let's see, 448 days, roughly. It's over a year, almost a year and a half, year and a third or so of this downtrend. So, and now when we come down back to where we were, on the 2 hour, we have broken out of this. And interestingly, we've had this flag here, and we could see that there was kind of two different ways to draw it. But what I like to do is I like to have several different sort of trend paths that extend out from previous patterns, previous supports, previous resistances, so I can get a good idea when there is a price action that's interacting with multiple different trend lines, as well as potential Fibonacci levels or macro trend formations like this massive downtrend. Well, we can see right here, this is holding a lot of support in this ascending wedge that we have here. It's almost a parallel channel. It was almost a wedge. So it's kind of either way you want to draw this. It's equal, same breakout sort of pattern. And these tend to break down. And if you want to find out more about this, I want to remember to reference you to this. You can always go to the pattern site, the pattern site. And you can look through this, go to chart patterns, and you can just click through some of these ones that you hear people talk about all the time. And I'm putting together, we've put together a long list of some of the most regularly occurring patterns. And we go through all this in BitLab Academy. And that's, of course, this is a newsletter. But if you do want to sign up for BitLab Academy, I forgot to say, we do have a huge discount going on right now, 15% off everything, whether it be indicators or the courses. And that's, you can use bullish 15 at checkout, and you can get 15% off your first month there. But the point being here is, you have all this information and data that you can compare to the different patterns. In this case, we have this ascending triangle, this ascending wedge. Sorry, and these tend to break down. And this is exactly what happened. So you see this broke out to the downside, but then the bullish sentiment, the bullish sort of forces, the market makers, as well as retail coming in, has found support on this level here at the 20,400 level. And we push up, and now we found resistance directly on this massive downtrend, this downtrend of resistance that's been all the way since 55 days ago. This was around, I think, November or so of 2021. And so we can see this line is extended through this, has also been created this sort of symmetrical triangle. I would want to call it a bull flag, but the reason I won't is because the length of this flagpole and the length of this sort of extension here, this flag is bigger than the pole that it was on. So I'm not really going to call this a flag because it does vary a bit there. It's more like a descending channel. And this is fairly symmetrical, but we can also see with this wick to the downside, it found perfect support on this extended support line. And I'm actually going to make this blue. I did this very fast before coming on because I was on a stream this morning. So I'm going to make this blue. I like to make the supports blue and the resistance is red. So we can see that this is broken out to the downside. Now, does this mean, this is a question, does this mean we're going to break down from here and just, this is a failed rally and we are going to break back down and find either flip one of these levels to support, or are we going all the way back down to find new lows, you know, in this, you know, this sort of target here, which would be, and it was at like the 13,800. Yeah, it's 13,800 level. Are we doing that? Do we need to look for that setup? Do we need to look for this setup? You know, this pullback here on Fibonacci levels, this point of control. What do we do at this level when we're trying to identify what the best, most productive, most likely profitable trade setup is going to be to take when we're in this sort of setup right here against massive macro downtrend resistance, but the bullish sentiment is starting to brew? How do we contend with this? What is the best strategy to attack this market in the most productive, profitable way? So what I like to do here, and I'm going to delete this line here. What I like to do in this situation is exactly what I've preached to you over and over on this channel here at BitLab Academy daily streams, is starting with this macro, midterm, micro setup. We want to look at this. We want to always remind ourselves of this market cycle strategy, because we've all seen the Wall Street cheat sheet of the different emotional states that we feel, whether it's anger or disbelief or greed. But that doesn't really tell you anything. It gives you an idea of what the sentiment is around certain parts of the market cycle. But what's more interesting than greed, if you are feeling fearful or disbelief, well, first off, we need to take a step back from what our emotions are, and we need to refocus on what our plan is. If you have a plan of action, if you have a plan of attack to attack any different stage of this market cycle, then you're going to be much more well-equipped. You're going to be much more equipped to deal with the market and not be held hostage by your emotions. So doing this macro, midterm, micro, we know we're in this macro downtrend when we look at where we're at. Let's go back to the weekly. We're going to zoom in here on the auto. We know we're in this macro downtrend. Now we need to identify the next stage of that. Okay, if this is the macro downtrend, what's our midterm sort of, what's our midterm structure that we're in? So let's come down from the weekly, let's come down to the daily or the 12-hour. We could see that we already identified this, but we're against this macro downtrend of resistance, which is this line right here. And how do we attack this? Well, now we can actually start using our indicators, and I'm going to use both free indicators and the BitLab paid indicators, so we can look at this in two different lenses. So we're going to pull up our MACD, RSI, and stochastics, not stochastic RSI, but I prefer the stochastic. And we're going to look at this. We're going to zoom out just a little bit. I'm going to make this a little larger. Now we're going to zoom out on this so there we can see it all. Now I'm going to double click on the RSI. And if you want to, for yourself, if you want to be able to see this more clearly, you can just, once you double click on the indicator, you go into settings. I'm going to pull up this light line because it's a lot easier to see, as you can see down here. And then on the stochastics, I'm going to make this light line as well, so it's easier to see. There we go. So what I'm looking for here is we had a large macro midterm sort of bullish divergence on the RSI, and I think on the stochastics and also the money flow, but we're not going to pull the money flow up on this one. But we can see right here that we have this massive sort of uptrend of support that is brewing into this sort of sideways and downward action. Similarly, on a much larger time frame, there's even larger bits of bullish divergence on the on the RSI and MACD. I don't prefer to really look at divergences on MACD because it's more of divergences on what's going on with momentum, and that's essentially what MACD is. It's when these two lines are getting further apart, the quicker moving blue line and the slower moving red line, it means that the moving averages are moving farther apart. And in order for those moving averages to move farther apart, that means that momentum is increasing. And all these markets work in cycles. They work in cycles of momentum, strength, and sentiment. So MACD is great at measuring if we're increasing or shrinking on momentum. But what I really like to look more clearly at is what's going on with the RSI, the RSI, and especially where we're at. If we look right here, we're still on the daily, and I can see just at a glance, looking at, you will work with me, RSI. Looking at the RSI right here, we see this level, this lower level, and then this higher level. These two levels right here. If I do Option V, I can do a line there. And Option V, if you're on PC, it would be Alt. I like to really do these quick keys in TradingView so we can really navigate through this quickly. But we can see this higher, lower, lower, higher. So that is classically what's known as a bearish divergence, because we have these two tops. The strength, there's less strength on the second peak, whereas somehow the price got higher. So that means there's less fuel behind this move. And if there's less fuel behind this move to get up there, how is there going to be enough fuel to sustain where that price level is at? In addition to that, we're pressing up against this macro level of resistance. So now that we're on the daily, we started with the weekly, we moved down to the daily, and now what we want to do is we want to zoom this in, because we do the 3-cycle strategy: the macro, the midterm, and the micro. I call it micro, some people call it local, and I want you to know those smaller time frames can be divided infinitely, really, below the 4-hour. Anything below the 4-hour, I consider the local or the micro. And it just depends on your strategy, whether you're a longer term trader, swing trader, a scalper, or, you know, sometimes people do 10 trades in a day. I don't have the audacity to have that sort of emotional roller coaster to be trading on 3-minute charts. So I don't like to do that. I like to keep it between 24 minutes for my really sniper sort of really lining up exactly where I want to pull a trigger on a trade. But I like to keep it between the 1 and 4 hour when I'm really trying to identify those positions on the chart. So we can see here much more clearly. Remember, this was a daily bearish divergence. But looking at this, every time you go on a smaller time frame, you're getting better resolution on the chart. So now we can see, even right here, this is slightly going down, and this is on, so this should be, but we're seeing the strength is actually falling quite a bit off a cliff. So what I want to identify now is, where is our RSI? And after I identify if our RSI is above 50, I'm also then going to next look at my stochastics to see where the true sort of rubber band is, in terms of if the rubber band's pulled back to launch it back up, or if the rubber band is kind of indifferent with no stress on it. And that's what I'm going to find with the stochastics. So we can see this is a bearish divergence. Now, what did I tell you I like to do yesterday? I like to come right here. I like to do Option H and do roughly right about where the 50 mark is, which is halfway. Inherently, if we see like right here, this price action came down, found support right about where the 50 is, which is where this bounced, which was confluent with where this support was. And so what we're looking at right now, and this is interesting, there's two ways to look at this. The price action, if we zoom in on this, this is, look at where this pulled back to. The price was 20,400-ish. This pullback to, I mean, a very small pullback to 21,500, okay? And the full wick would be 22,340. But the RSI also made its way all the way back to this level. So the question here is the RSI going to break past this level? We can already see it kind of curving, but if it's going to break past this level, find resistance and reject down, then I'm definitely going to be looking at these lower targets that I've identified on my chart. Because what do I do, and what should you do anytime you come to a chart? You look at everything on the chart. Great. Sometimes, no matter how mapped out I have a chart, once I look at everything on the chart, I'll clear everything off my chart, and I will rebuild my chart. I will remap it. And some of the same regions are going to be lined up. A lot of them are. But when you do this, you can then basically look at it with a fresh set of eyes. And one of the tricks that I use when I'm trying to map all this out so I can make the right calls, looking at what's going on here, is I come over here on the right, you create your list, and I went through all of this in the Chart Like a Pro video. If you haven't watched that, definitely check out that. It's here on the YouTube channel. And you can add in your list, you can add several different charts. And so you can map them out differently so you're seeing different stuff. So what we're looking at right here, because we've already mapped this out, hopefully you already have your chart mapped out. I challenge you to map out another naked chart, map it out with new lines, new graphs, new things that you're learning, and then you can compare and contrast so because you'll see different things within the chart. And then we can see right here that this price action is pulling back, but we're having a higher low, low. See how it's coming up? But the RSI is fully reset. So what I'm really looking for here now, we do see that the MACD is kind of on a downward trajectory. It's not sort of rolling over yet. So that gives you a little bit of pause, but there's not increased volume coming into this downside price action. That's good because that means there's not volume coming into selling, meaning people are excited about that downward move. And we're also seeing the stochastics basically resetting down here to this lower side. So in many aspects of the world, of the way of looking at this right now, we can see that although price has pulled back, not only is price pulled back, we want to look at the mechanisms that allow price to have further upside. And in this case, with this pullback, we've reset where our RSI is. It's still holding above the 50 line. As well as that, the stochastics are showing that they're nearly fully reset. They're not down below the 20 yet, which they basically just tapped on this prior move here. But at these levels, it indicates to me with the RSI near the 50 and more so the stochastics being at these low levels, it's showing that there's a lot of room for the bulls to take over here. But what we want to really pay attention to is no matter how bullish we are, we're up against this macro downtrend resistance. So let's practice our risk. Let's make sure that we mapped out to the downside what our levels are, and we can do that by just doing a simple fib, Option F or Alt F if you're on a PC. Come from the bottom of this move up here, and we can see that this red line. Let's actually take this. Yeah, there we go. This is actually the bottom here. So this red box that I have mapped out here is essentially the golden pocket of where we could come all the way back to. I personally think I'm erring on the side of the price action, probably bouncing somewhere in this region here between 19.6 and 20,000. So the fact that these signals are starting to reset, the volume's not coming into the downside, barring any sort of negative move. I think a lot of what's going on right now is traders and investors are watching what's happening with the Fed, with the FOMC meeting that's coming up next week. There's not a lot of incentive to make really strong market moves right now bullishly if there's going to be some caveat to what comes into the news on the general sort of broader economic landscape. And so that's one of the things. Although we're looking macro, midterm, micro on the charts, we also need to zoom out from all that and be aware of what's happening on the grander stage, on the grander, all these markets are tied together. They're correlated. They work in concert with each other, whether or not we like to believe it or not. So it's very good to be tuned into the charts, but it's better to be tuned in the charts with context of what's happening on the grander stage, which can affect this. So I'm just going to pause here for a moment and just going to shout out all of everybody in chat. See Matt C, always such a good supporter. Karen Swigart Harris. We got Crypto Sub Method. I saw a mellow fellow. A mellow fellow, will you please email me? You said you had messaged me on the customer service side of thing on the BitLab. Reach out to me. I'd love to talk with you about that and get you all sorted. Alex Green. We got newer JK. King Pheasant. We got so many people here. Kasha Katz, Brad Guidell, Alexandra G, Justin Eubanks. I saw Elliot Locke in here earlier. Jenny. We got so many people in here. Just sharing thoughts, sharing lessons, sharing everything that we know so we can all work together and grow together and really try to do something with this market. Take hold of it so it doesn't take hold of us, right? And man, I still have not had breakfast this morning. I'm going to do what the market did last night. The market shook us all about. So I'm going to go ahead and take a little swig of my chocolate milk because I'm a child at heart. All right. Let's keep this going. Let's go ahead. Please make sure you hit that like button, subscribe button, ting that bell. Keep us moving along here. All righty. So now looking at these levels, what is our strategy? So we've already talked about identifying what's happening here. We're identifying the patterns. We know we're looking at the momentum indicators as well as the strength and the stochastics. But how do we play this? How do we identify making the right trade and making the right trades, the trade setups consistently? Well, I want to go back to this market cycle trading cheat sheet because this has so much information on it. Come here. If you like this, retweet it, download it, share it, because the more people that use these sort of strategies, the more consistent and profitable you're going to be over time. Because essentially what you want to do is identify the trend that you're in, whether you're in accumulation zones, which are down here on both bottoms here, or a distribution zone, which is the top of a market cycle, or somewhere here where you've actually defined an uptrend and you can take advantage of pullbacks where you buy on the bounce at this ascending basically trend line. Similarly, if we're already in a downtrend, which we've been in for a long time, and this is where the caveat is with all this, you want to take a short, or if you're taking longs at these pullbacks, it's aggressive, but typically you short in a downtrend and you long in an uptrend, and you take profits each time this rolls over. And just I'm going to repoint this out. Each time this rolls over, each one of these pullbacks is essentially this entire market cycle happening on a smaller time frame. That's why I'm so big about pointing out you need to do the macro, the midterm, and the micro, because you might be trading a macro uptrend, but you can use this same trading strategy on this micro cycle that's the cycle within the cycle. So where we're at right now is we've been in a major downtrend. We are in an accumulation zone, and this is pointed out by a couple of metrics, which I'll share with you in a moment, but we're here. I'm going to go ahead and delete this Fibonacci, but we are here in this macro downtrend at this resistance, trying to play the market when it goes like this, catching it as early as possible, a retest, and then, up before it kind of gets rejected and then goes on the rest of the main cycle. So how do we take advantage of this? Because there's two options that you can do. You can long it and you can short it. Some people will both long and short it, or they'll map out the strategies for both. So what we want to do here is we've identified what's going on all the way down to the 4 hour, that we're finding support here on this 50 line. So what we can do is we can set up rather than front running trades so you can get the most out of it. That's how you get the most losses consistently over time. Rather than front running a trade so you can get the most out of it, remember this market cycle cheat sheet, because it's not only the cycles, but you can also see here I've highlighted when you break resistance, you want to test it as support to confirm it, and then buy somewhere along here. The most conservative is once you've broken this high. So similar when you're doing a short, when you've broken support, and you come back and test that, flip it to resistance, and then your new lower low, you break this low point, that's your entry. So where we're looking at right now with what's going on with the price is we want to see, I'm going to delete this line, we want to see price action basically break through this with conviction, get rejected. Yes, rejections are good when they're above a previous resistance. Now you have the opportunity to find this previous resistance as support, and then you have a confident trade that you can make somewhere in this level here, where this is the high, that this is the safest entry. But depending on your skill level, people like to find, once you flip this to support, then you can find an entry anywhere in here with the stop loss just below that low. Okay. Similarly, where we're at right here, if this does break down, if this is a retest of resistance to confirm it to come down here, and we need to look for shorts, then what we want to do here is, of course, take advantage of all the data that we have within our indicators, take advantage of what the indicators say about momentum, look at our candle structures. We've already identified that momentum has been shrinking. This is large momentum sideways. Now this is much smaller amount of momentum is taking it to here, and we're actually getting a lot of interaction here, but we're holding above the 50 line. So this is inherently bullish, with the caveat of being in a macro downtrend. So I'm still waiting for that breakout retest continuation. But even without that, because and I'm not saying this is not financial advice, but I am inherently bullish. So any rejection from here, you have the ability to short from here. That's not my strategy, because I think that we are in this position, this section of the market right here, and I'm not willing to be caught in a short when the market goes back to the upside, regardless of if I have a stop loss or not. Because you long uptrends and you short downtrends. Now, I understand that we are in a macro downtrend, but I think we are nearer to the bottom than not. And so any pullback here, I'm looking for targets to add to my long positions. So the few longs that I have on a shorter time frame trades, I'm looking at any entries not right below this line, but I'm looking at entries in this green region that I have here, which is a 19,600 down to 18,008. But I'd like to hold above 18.3 at the minimum, to stay bullish. But I'm looking anywhere in this region here from 18.8 up to 20,000, laddering in my entries with small percentages of this. Now, in addition to that, I do have some long positions already, but if we break out of this and we get this confirmed breakout where we break past this resistance, flip it, come down, flip it to support, although I already have some longs, which I've taken all the way from about roughly here, 16, I think I was like 16.5s to 16.8. I have some longs in here. It's a small amount, a conservative amount of longs, not my entire portfolio. What I'm looking for now here, yes, price is higher here, but the risk is less once we've broken out of a macro downtrend and we flip this to support, and now I can add to my longs, basically, once that's flipped, I'll be adding them somewhere in this 23.4, 2,400, and then I'll be laddering here for sure. But then this might seem like it doesn't make sense, but it does in the grand scheme of things. I will also wait for this to break past this critical sort of 25 level, test this as support, add more longs. And the reason this is because this is a previous high in this local region that we're in right here. So I want to have a lot of conviction and support in the data on the charts for me to allocate more and more of my capital. Because when we think about it, let's go back to the macro. Okay, we're so worried about a multi-$100 move or $1,000 or $2. I'm going to double click on the screen so we bring up just the price action. Look at this last move. This is inherently kind of where we're at here, okay? We've already started this sort of ascent here. Now, if you miss this entire move, and waited, because there's going to be basically two cycles sort of, there tends to be two push-ups at least in every bull run that goes from the low to the actual macro high. And so we can see right here, we have a push-up, pullback. In this case, we did have a black swan with with COVID and the pandemic. They came all the way back down to 3,800, but this likely would have pulled back somewhere in this region because we already saw this happening, which went from 13,797 down to 6,400. So, that is it's a pretty decent size launch. That's a 55% loss. So conservatively, you didn't have to deal with, if you are a newer trader, this makes more sense. You can wait for the push up and the pullback, and at that level, get into basically enjoying all of these returns, which would have been, basically almost 1,000%, 880% return. Now, given that you didn't get shaken out by this COVID pandemic that shook the markets out, all markets, not just crypto and Bitcoin, but all markets. So you have opportunities. You have opportunities within the market to be aggressive. And with those opportunities, you can more aggressively lose your capital. And you have opportunities in the market to conservatively attack the market and approach it with letting confirmations come in. And when those confirmations come in, because remember, we are in this macro downtrend. We're in this macro downtrend. So I'm looking for some assurances that this isn't just going to break all the way back down from here, all the way, another 40% down to the 13,600 level. So my whole point here is you can look at the data, you can look at the indicators, you can look at the candlestick patterns, you can look at momentum, But what you can't discount is time in the market. Time in the market beats timing the market. So we're seeing the signals, we're seeing the setups, we're seeing the opportunities start to present themselves, and now it's up to you in order to play this with the plan and with the plan of action and I don't want to say conservatively, but with conviction on your plan. If you have conviction on your plan and you have something in place, then you're going to be much more likely not to be shaken out when we have these emotional sort of emotional shakeouts in the market. And this last night was case in point of exactly one of those. So let's go back to zooming in to where we're at, and then we're going to move on to a couple different altcoins. So going into the 4-hour, go auto. We are still within this channel. So if you were looking, if you are a bear, because I know I'm kind of leaning on the bullish side, but if you are a bear and you're looking to short this, because we're in this region now, technically we've tested this level of resistance. We got rejected. We confirmed the rejection. So in this way of looking at this trade setup, this is giving a lot more weight to the bears because we've tested the resistance, we've retested it. Now, what I want to see is right now where you have this trend line, when this trend line here is broken, this would be an entry for me for a short on a conservative level. If you're aggressive, sure, you can short right here, but because there's a mix mash, it's a very choppy market right now. It's looking to shake as many people out as possible. So I would be trying to make sure that I was looking as many metrics as possible to really understand if I should be shorting. A good example of this is now if this does break down, you could short and you could take profits at these various levels, right? But what I want you to really get into the habit of doing is utilizing the many free tools that are out there. Using lookintobitcoin.com. This is a free website. You come over here to the right, you go to charts. You have access to all this different stuff within this, and you can explore it. You can see how it relates to what's going on in the market in previous history, in historical bull, bear markets, choppy markets. See what's going on. See how that relates to what's happening. And what I want to notify here is this is a 1-year hodl wave, okay? And you can scroll down here and even get more information about it, what's going on here. This is people that have been holding for a year or more. Minimum of a year, holding their unspent transactions, which is what UTXO stands for, unspent transaction outputs. So it's basically when you're holding these crypto in a wallet, they're known as a UTXO. And so we see this right here. We see this yellow line. What do? We look at the entire chart. So we're looking at this entire chart. Now we can see all this key at the bottom gives us an idea of what's going on. The black line is a Bitcoin price. Okay, we got that. The yellow line is a 1+ year hodl wave, meaning people it's measuring the amount of people that have been holding for a year or more. On the left side, this is the percentage of the market that is within that hodl wave. This is the Bitcoin price action. Now we've looked at everything on the chart, so we can see this was the 2017 cycle right here, as we can tell by the dates on the bottom, and then we collapsed, and then we're holding here the floor around 6,000. Then the market fell out of the bottom, got down to 3,000, 3,500, sort of low, 3,200. And then this is what we've been dealing with this last year. And what I want you to notice is this hodl wave goes aggressively into this bear market. It starts towards the tail end of it. We get a lot of people the maturity comes to the market because these people are no longer capitulating, because all the short-term holders, the capitulators, the people that don't have conviction, they've sold, which is how we've gotten this downward price action. But now we have smart money. We have more convicted people buying into the weakness of this bear market. Even right here, look, this bottom fell out. And look at this astronomical, this huge increase. There's a little dip here, but that was a quick shakeout. And then this is giving fuel to another bull run, because what it means is it's contributing to illiquid supply. It's contributing to the mature aspect, the mature cohort of people in the market, giving the market strength, because long-term holders don't sell when there's a little, bippity bebop of price in the charts. The reason these blow-off tops happen and the market tops happen is because smart money and institutional players sell into the strength of bull markets, which means if they're selling, who's buying at the top of bull markets? people that don't understand financial markets, people that don't understand financial assets. They're buying hype. They're buying, oh my God, Bitcoin is at 64,000. Yeah, I'll get in it now. Back here, you're an idiot for talking about Bitcoin. But now they want to buy it at 64,000 or 69,000. And then when the market drops, then they say, oh man, Bitcoin's a scam. No, you're an idiot for buying at the top. Now, more power to everybody that bought at the top. I was one of those people that has done it before. Yes, but we were idiots. Let's not be offended by that and realize we have strength in knowing that we're an idiot. Now we can grow. Now we can be smart long-term holders, buying at bottoms. Start like right now. I was talking with Tim about it earlier on Investing Bros. I get excited now, not when the bear market happens, but when we get this macro downtrend, when we get this large downtrend in price, I like seeing when metrics start coming in. There's excitement coming in the market with this volume. We can come into the BitLab market, BitLab trading stack here, where we're seeing. Look at this. We're seeing volume. This R and this R. This is volume R and H. These are bullish volume divergences here, giving sort of basically fuel a push to the market. And look, right after those, we get a pump in the market. We have this volatility, RVGI volatility index starting to expand. This blue indication here on BitLab, significant movement. This is showing a floor. When I'm starting to see these and the market's dropping, I'm saying, hallelujah, I got opportunity to buy assets in the digital sector at bargain floor discount prices, because now that I understand the charts, now that I understand the signals, I can be confident that even if it drops a little more, I can be confident using these different signals. This is another free tool. This is a chart within lookintobitcoin.com. You just come here to charts, come down, go over to NVRV Z-score, which is the market value to realized value, basically measuring the intrinsic sort of value of the last time every Bitcoin within the blockchain has moved versus what the price value of it is, the speculative value. And anytime this Z-score here, and what do? We look at the entire chart. We see what's happening here. This is the Bitcoin price, not price. This is this is the Bitcoin price potential. This yellow score is being measured over here on the NVRV Z score. This blue line here is a realized cap, also known as the realized value or the cost basis of how much every Bitcoin was the last time that it moved. So it averages that out. And anytime we're below this black line, which is a price, is below this blue line, is signaling that we are below fair value of the asset. And so we've see this in this green band down here. Anytime this orange line, this NVRV Z score is in this band, look at where price has gone. In this band, bottom of the market. In this band, bottom of this little mini bear bull market, boom. Launched it up, touched again right here, launch. We've been sitting down in here. There's so much time for opportunity if you pay attention to the signals. There's so much time for opportunity for you to make profits if you pay attention to the signals. Now, this is a little nugget. Before we go into a couple altcoins, this is a little nugget of wisdom I wanted to address here. In order to make profitable trades consistently over time, what you want to do is you want to look at what's going on with, I'm going to hide all drawings here. I want to hide them, not remove them. We want to find a 1, 2, 3, 4 confluence, meaning what's happening with the price action. Sure, that can be your one. And then in this case, using the BitLab market intelligence, BitLab hidden volume, relative extrema, significant movement, using these 4 indicators, none of them gives me a buy or a sell signal. It's up to each one of you to find that buy and sell signal based on finding that 1, 2, 3, 4 points of confluence. In this case, right here, this would be an excellent buy. Why would this be an excellent buy? Well, looking at this with using this BitLab indicator, there's 3 different bullish divergences here right at this level. Looking at the candlesticks, we have this large bearish engulfing candle, but we have 2 spinning tops in a row showing indecision and then an increasing. If you even here, if you didn't buy, we can see this the low that's written behind it. You can see the word low. It's basically a TA defined low based on a multiple candle series breaking making opening and closing above each other, signifying that this is a technical low. Now we also have a candlestick that is, bullish engulfing candlestick. It's growing past these two. So we're seeing already, just using candlesticks in these divergences, we're seeing multiple points that are giving me signals that maybe I can look at other signals just to confirm. If I didn't want to do it here yet, then I can zoom down here. I can see the bullish divergence on the volume, the hidden volume. So that's another feather in your cap. Then we look at the relative extrema, and we have these bars sticking out of this cloud, which is essentially like pulling a slingshot back, saying it's likely going to have to go the other direction. And then, of course, we have on the bottom this blue wave. Whenever we see this is a likely local trend floor. So we see this right here, trend floor. We see this right here, trend floor went up. See this right here, trend floor. So losing these, not one of them, using all of them in Confluence, finding that 1, 2, 3, 4. That's where you find your trade entries. We can do the same thing using traditional signals. So now we're here on the MACD, RSI, and stochastics. So now let's look at the same thing. Now remember, looking at when we're trying to find those trade signals, we see this massive downtrend continuing. Massive, I'm just gonna use my quick keys. Option T for, I can't do it. That's right, because I have all of these start here. So using these traditional indicators, we can see this bearish divergence already have mapped out with this line here, whereas we have the RSI is moving to the upside. So that was signaling us as this developed to start looking for other indicators that agree with that upside. So in this case, we see the MACD flipping bullish. So that's giving us fuel for the fire here. Even though we're continuing down, we see the MACD. We can tell by this histogram. I don't even need to see these lines down here. This is a green histogram, meaning this is increasing while this is decreasing. Now I'm looking for that signal for entry. Now we can look down here on the stochastics, which is just fighting in this oversold zone down here. And once we sort of cross out of this level and we find support, this would have been my entry right here when this, I would have zoomed in here. This is on the weekly. We can come down to the 4 hour, and we, that would have been roughly right here. You would have been in position, and we can also see that the RSI is finding support on this this moving average. So the whole point here, anytime you are looking to enter a trade, no matter what asset you're using, the key to successful trades consistently over time is to use larger time frames where you're looking at the macro and you're using your signals to start seeing bullish divergences or bearish divergences or increasing volume or decreasing volume to give you a hint of momentum and interest is increasing or is it losing, depending on what your trade strategy is for longs or shorts. And that gives you an insight to now go from the weekly down to the 3-day or the daily, and then you can sort of zoom in with more resolution. And then you can start looking at your other indicators, whether you're using the BitLab trading suite with all of our indicators, or you're using traditional indicators like the RSI, MACD, stochastics, candlestick patterns. And using the macro first allows you to be clued in to look with an honest technical bias, because technicals were indicating likely something was going to happen. Now you zoom into a smaller time frame, the 3-day, the daily, you start seeing it a little clearer. Then you break it down to the 4 hour or the 1 hour, and you can really zoom in on bearish or bullish divergences on that smaller time frame because they're already supported by the larger time frame. And now you might be you can be pulling the trigger on a move that's supported by the macro, the midterm, and the micro, giving you a lot more higher probability that that trade is going to work out. And when you do that consistently, setting your stop losses as well, you are going to see a world of difference in the level of consistency of profitable trades in your future. But man, we have been talking for some time. Aloha, everybody. Aloha to everybody, and welcome to the BitLab trading. BitLab daily stream. Sorry, I've just been going since this morning. Hey, welcome to everybody. So happy to have everybody here. We're going to be going for another 10 minutes or so, and then I'm going to have to jump off because I'm going to do TA on BitBoy Crypto. But let's do a couple altcoins. Let's do some more TA on some other coins. We did a Link the other day. We also did Atom. So let's go ahead. Let's bust down on some. Let's do some Cardano. And we're going to do it from scratch here. A little 2-minute technical, a little very quickly sort of break down exactly what's going on. So let's go to our, I got this Stream Deck yesterday, and there's issues with it connecting to OBS. So my apologies there. So long story short, thank you for all the patience, everybody. Long story short, we got these massive trend lines. We drew from here and then also here because of all this resistance that we've actually broken out of now. But here we've got resistance, support, resistance. So we're kind of in this zone here, and we can see that, and I apologize, everybody. You should be able to see it now. We can see here that the momentum was increasing with the larger candles, and that this is starting to roll over. Now, what we can also see is here with the histogram that this momentum was increasing, but starting to roll over. We could tell by these candles getting smaller. And big shout out to everybody in chat. It's a one-man show over here getting this done, so I apologize. Big love to everybody there. It looks like we didn't lose too many people on that, but shout out to everybody. Thank you for being here. Make sure you hit that like button, hit that subscribe. We're trying to bring the alpha to you, trying to bridge a gap from beginner to pro, explain things on a more basic level while also sharing some advanced strategies. So what we're doing right here, we're mapping out the ADA Cardano sort of chart. These yellow lines here, as I mapped, you didn't see because the screen was off, where I put these lines where the golden pockets were of all these various different levels. So what we're trying to find out here is with our signals, how do we identify what the likely move is from this massive resistance that we're coming in, this previous price action, which is this green line that comes across, confluent with this massive downtrend of resistance that we're finding in. And we're also seeing a little bit of loss of momentum as this rolls over. So what do? We always do 3-cycle strategy, the macro, midterm, micro. So we looked at the macro, we mapped it out. Let's go to the midterm and then figure out on the micro how we're going to address this. So we're on the macro. Let's go down to the daily. We're going to go to auto, bring this large. So we can see here that this is trying to have a little bit of a reversal, but we can also see, and I'm going to do option T for my trend line. I love quick keys. You guys are going to, my goal is to get you all using TradingView like a boss rather than coming over here, finding your tools. You can use all these quick keys on your keyboard. Option T for trend lines, option F or Alt if you're on PC for Fibonacci's, option H for horizontal lines, option V for vertical lines, option J for a horizontal raise. We're going to get you there, man. Okay, so we're finding a little bit of support here, but this is also, it's looking a little, it's looking a little stunted. This high got here, this got a little lower, this is getting a little lower. We're also seeing that there's a bit of a bearish divergence on the stochastics. I assume probably on the RSI as well. So we're seeing a little bit of weakness now on these signals as this price is going up. And it's in confluence with what's happening with this this massive downtrend of resistance. So what we want to do is we want to protect ourselves. If we are in a long one, I would have taken profit at some of these levels on the way up and wait for the big move, wait to break out of this massive downtrend resistance we have here. Flip this with a confirmation of bullishness, flip this to support, and then break this high, and you make your entry somewhere in this zone here. Now, if you are aggressive and or maybe you're more bearish, in this level here, what I would be doing is I'd be looking for breaking of this trend line here, and I'd be entering once this broke out, tried to test up a little bit and came back down, but with a very tight stop loss, because I am inherently bullish on what's happening right now in the market. I think what's really more often than not what's going to happen is there's going to be a lot of shaking out. There's going to be a test to the downside, getting people to go short, and then it's going to reverse back up to the upside, getting people to go long and liquidate all those shorts. So we're going to get a pump that's a little bigger than should be because those shorts will get liquidated. So it's a short squeeze. And then the price is going to come back and scare everybody. But all the people that are emotionally trading will be wiped out by then because they're not waiting for the confirmations on their trades. But I think I've got to go quite soon here because I got to hop on another stream with BitBoy. I'm doing the TA over there for the day. But big love to everybody. I really appreciate y'all being here. Make sure you follow all of these socials down here on the bottom. Give me a follow over on Twitter. If you have not followed me there yet, that's just at Kelly Kellum. That's an easy one. Make sure you like and subscribe, ting the bell, come back here. We're here every day, 10:30 a.m. Eastern Standard Time. Really appreciate it. Really want to build a community here. Really want it to be a positive, impactful community with, you know, constructive criticism for people and constructive feedback. We're not here with any trolls. We don't deal with any of that. This is all about growing. This is about doing this together. Big love to everybody. I really appreciate you all. We'll see you on the BitBoy Show in a little bit. And if you haven't yet, check them out. And also check out Hit Network if you haven't. And before I leave, I do want to say, make sure you come over to BitLab Academy YouTube. Give us a follow if you're watching on Hit Network 24/7 stream. But if you're already following here, make sure, share this with your friends and come check out the live playlist. There's a lot of great stuff here that I'm really trying, this first week that I was streaming, really tried to break down a lot of the basics, a lot of tools, charting tips, TA tips. Go through this. This is all this stuff is meant to be evergreen. So big shout out to everybody. Love and success. Happy hallelujah. I hope you have a wonderful day. I'll see you in the next stream. Adios. Adios, muchachos. Thank you for watching. Gonna get some crypto yet again. Adios, muchachos. Thank you for watching. Gonna make those trades work profitable again.